Lost your crypto records? Used a mix of wallets and exchanges? You are not alone, and the IRS knows it. In fact, they've invested heavily in blockchain forensics, and they can now reconstruct your entire transaction history, even if you can't. In this video, we'll break down how the IRS is doing it, why it matters even if you've never been audited, and how to get ahead of the problem before it becomes a legal or financial mess. Let's start with this. The IRS can see more than you think. They've partnered with companies like Chainalysis and TRM Labs, blockchain analytics firms that help trace crypto activity across wallets and platforms. They also have access to John Doe summonses, which they have used on major exchanges like Coinbase and Kraken and Circle, forcing these exchanges to hand over customer data for years as far back as 2016. So even if you think you've kept your transactions anonymous, if you've ever used a KYC compliant exchange or transferred funds through centralized platforms, there is a trail. Here's how it works. The IRS starts by pulling what they do know, like transaction data from exchanges, wallet addresses linked to your name, or prior tax disclosures. Then using blockchain analysis, they trace transfers between wallets, token swaps and trades, sales and conversions to fiat, even NFT mints or staking rewards. They can piece together gains, losses, and unreported income, even across fragmented platforms and DeFi protocols. And when there are gaps, they use statistical modeling to estimate what's missing, and they assume the numbers won't be in your favor. So, what can you do? First, don't wait until the IRS reaches out. Be proactive. Gather as much data as you can. CSV files from exchanges, wallet activity, blockchain explorers, even tax software exports. If records are missing, recreate them using reasonable methods and document your approach. You may also need a forensic accountant or crypto tax attorney to help optimize and organize everything, especially if you're amending past returns or trying to correct gaps in reporting. At Gordon Law, we help clients rebuild their crypto tax history, respond to IRS notices, and avoid unnecessary penalties. Here's the bottom line. The IRS is no longer playing catch up on crypto. They're ahead and watching. Whether you're cleaning up past tax years or trying to report accurately moving forward, don't wait for a knock on the door. Contact Gordon Law Group for a confidential consultation. We'll help you get compliant and stay ahead of the curve. And if you found this video helpful, like, subscribe, and share it with someone who trades crypto. Because when it comes to taxes and blockchain, the chain of evidence is stronger than you think.